Hey everyone, how's it going? We just got the closing bell for Wednesday, September 25th, and it was a pretty kind of a roller coaster type of day, even though in the end we didn't really go anywhere. So that's basically been the theme for the past week. So yesterday, whereas we started out down and then traded up higher, today we did the exact opposite. We started up a little bit higher, got a little bit of chop, and then we just went down all day. And then towards the end of the day, last couple hours, more of sideways movement, but fairly large range movement during that time period. In the end, though, when we look at a general overview, you can see that all we've really done is chop sideways. So we've got this pretty narrow range chopping going on. And for all the reasons that we already talked about yesterday, this is probably going to keep on happening at the very least to the end of this week, but potentially all the way until we get elections. Now, if we're talking in that time frame, it's probably not going to last in this narrow of a range all the way until elections. So there is room for us to move higher and definitely room for us to move lower, higher, perhaps as high as 580 before we kind of max out and start moving lower. The thing that we want to be very careful though is recently the market has been making a lot of the moves, or I should say the moves have been made overseas, not so much on domestic soil in the United States. So that's just a reflection that recently global news, global economy has had a stronger effect on the US markets than just domestic stuff. We saw our no reaction to our GDP, no reaction to the rate hikes, no CPI, all these earnings. So domestically, we're just not reacting to things that are happening within the United States. More is being reacted to in terms of the world economy and world events. So we want to be careful because at any moment in time, just say we think that it's going to hit 580. Well, it could hit 580 overnight and then revert back by the time we have the US markets open. So we want to make sure as we get near certain targets, you may want to just take profits rather than holding overnight and risking your target getting hit when you can't trade and then suddenly you're down on a position. That's just something that we want to be careful of, or you could go into futures markets and hedge yourselves if that happens. If, for example, if you had a trade in SPY, that would be super easy because if you saw that 580 level or the equivalent in the futures market be hit, then you could sell short some futures. And that way in the morning, you if it came back down, you would make gains on the futures, take your loss on the S&P 500, and then you would break even. So basically, you're locking in your gains using the futures market, and then during the market open, the US market open, you can close both positions. And then if it's not directly the S&P 500, then you're going to have to play with correlations and deltas and ATRs and things like that. But otherwise, it's a pretty good idea just to stay a little bit shorter than you might normally, maybe take profits a little bit faster than you might normally, simply because there is a lot of downside risk in this market. Yes, we could continue to go higher. As I said, 580 is not unheard of, but that might get hit during a time when US markets aren't open. So you just want to have more options open to you, or you want to shorten your time frame. If it looks like for example, if we hit 578, 579 in the US market, well, 580 is just around the corner, and that could happen in the Asian market. And then we open down at 577 in the US market. So just if you approach 578, 579, might be a good idea just to take profits a little bit early in this particular environment. I'm not talking in general. I'm just talking specifically to the situation that we have in the markets right now. So we're chopping sideways. Let's see what happened to our VIX. Our VIX is at 1539, still at a slightly elevated level, and in fact, a tiny bit higher than yesterday. And then we're going to take a quick look at our 90-day highs and lows, see if we got any changes in that. So in terms of momentum levels, let that load up real fast. And let's take a quick look at bonds. You can see that ever since that rate cut announcement, that's supposed to send bonds higher. And instead, we've just been trading lower. Lower prices on bonds mean increasing yields or increasing interest rates. That is completely flying in the face of the Fed and Powell's. They cut 50 basis points, but interest rates move up. That's egg on their face. So we'll see. We'll see how all of this plays out, or if this downward movement ends anytime soon. But for now, it's going completely against what the Fed intended, and that is kind of saying that they're losing a little bit of credibility with the US markets. So let's take a look at what else. Oh, dollar. We haven't looked at this in quite some time. You can see that the dollar broke this trend that we drew a long time ago. So now what we want to pay attention to is this. If this gets broken, and in particular, we want to pay attention to this box right here. So if we notice, we are at some fairly low levels in the US dollar. I guess this line would be a little bit better. We see that we've reacted to this line or near this line quite often in the past couple of years, and we've been consolidating near it for about a month now. If this movement is over and we chop sideways through this trend line and start moving higher, then that is going to start putting pressure on dollar-denominated assets like gold, like silver, like oil. So there's been a nice movement upward in gold that was associated with that downward movement in US dollar. Let's take a look at that again. That downward movement started at the end of June, or we could call it the middle of April. Let's look at gold. Mid-April, right here. So you can see that this movement upwards is associated with that dollar downward movement. If the dollar starts moving higher, then just be careful, because there will be a reversion, or most likely be a reversion, because that's going to put a lot of pressure on gold. So if you've been a gold bug during this time, you can see that it's been moving parabolically and it's reaching some pretty high highs. Well, one signal for you to watch out for when to take profits and when to exit is if that dollar starts moving upwards. So we can say the same thing about oil. It's neared a resistance point, and it might start moving downwards if that dollar starts to move upwards. I'm not saying that for sure it's going to happen, but it's just something to keep our eye on that can give us a little bit earlier of a warning than simply looking at the chart of the US oil or of gold directly. Those are just a few things to be aware of. Let's take a quick look at our momentum. Our upward momentum has stalled. We went from 434 down to 280 up to 3 something. We were talking about that yesterday. Yeah, 344 and back down to 85. So we don't have a lot of momentum in this market. This is indicating the stalling or sideways movement. So don't expect a huge push upwards. We'll want to see a lot of stocks starting to break out and make new 90-day highs for us to have momentum upwards. This is just looking a lot of chop sideways, which is exactly what we've gotten so far, probably what we're going to get tomorrow and Friday. And so there's not really anything too exciting. You could do some verticals, some iron condors, some range bound type of trades in order to pick up some profits during that time period. But for the next couple of days, it does look like we're just going to continue to chop sideways. By that time, maybe this EMA 8 will have moved up to meet that, and then we'll see if the S&P decides to move upwards or fall through that moving average. So just watch out. Be careful of your dollar-denominated assets. Look out for bonds. See if that starts to turn a corner or if it keeps breaking down. If that happens, then that's not going to be great news for the S&P 500. And we'll just take one more quick look at SMH. SMH tried to, but was not able to break through that EMA 100 or the quarterly level. So we're still kind of in danger zone in terms of semiconductors and the QQQ. Okay, that's going to be it for today. I will see you all tomorrow. Have a wonderful day.